Joining us from Sydney is Peter Esho. He's Chief Market Analyst for the Asia Pacific at City Index. So it's fair, Peter, but I don't think Billabong's board thinks so.
No, they don't. And if you look at the actual terms at which they were approached by, one of the conditions was that they maintain the current ownership across their businesses. And, you know, they've intentionally gone out and divested 50% of Nixon in order to void that term and really play defence. You know, this is a stock that, you know, only a few years ago was trading in excess of $10. It, you know, fell well below $2. It's had a double whammy effect of being a cyclical business and having debt on balance sheet, and debt which is due to mature sometime next year. And so there are a lot of vulnerabilities there, and I think, you know, $3 is great if you bought the stock at $1.80, but if you've been holding the stock for a few years, it's pretty much a slap in the face.
Yeah, well, you know, which way is it going to go, do you think, in the end? It does seem as though there is a large body of thought that they're just holding out for more cash.
Well, they've dug their heels in. I mean, they've pretty much turned around and dismissed this offer. And I think, you know, it would have been very difficult for management to have accepted it, considering where the share price has gone. And, you know, whether they're successful in going at this alone and defending future offers is yet to be seen. This is still a business with a lot of vulnerabilities. So in terms of the current offer, we think it'll be sidelined at the moment. Perhaps the private equity groups may re-emerge with revised conditions, maybe something a little bit more firm, maybe going hostile, maybe seeking to take a blocking stake from some institutions out there. So at the moment, they're pretty much Billabong's management and board are trying to fix the situation themselves. But, you know, things can change.
Peter, I mean, it's a big global brand. It's well recognized. That's got to be with the chief strength of it. But on the other hand, we do have, well, a tough retail environment globally. We could also say some of the debt positions, the debt position you alluded to, is pretty worrying here as well.
Yeah, look, it's a strong brand, but that doesn't necessarily make it a very good investment. They've got retail exposure. They're spread across places where there are vulnerabilities, in particular Europe. It doesn't have the same, perhaps, brand equity that a Tiffany & Co. might have, or a Louis Vuitton, or a Samsonite, or a Prada, which are also listed in Hong Kong, for example, or you can get exposure through US or Europe. And so, you know, it is a strong brand in a very niche segment that it operates in, but, you know, there still is a very large job to do, and it's in the apparel space. Apparel businesses have been struggling all around the world, not just in this key area. So it's a retail business, it's in apparel, it's got a good brand, but unfortunately the numbers are working against it.
I want to shift industries now, Peter, and have a look at ANZ as well. 1,000 jobs announced that were going to go there earlier this week, coming out with its figures. What did you make of everything here?
You know, ANZ for me was pretty much the standout across the region, not just in Australia, but across the whole Asian region in terms of quality in their scorecard. It's a first quarter result. It's in line with market expectations. There have been margin pressure in the Australian banks, but they've minimised that through strong deposit growth, particularly in Asia. The underlying Australian business is strong. They've got this platform in Asia, their markets division, where they took a hit in the last quarter of 2011, actually turned around and delivered a very nice result. Commonwealth Bank equally was very strong. The vulnerabilities in National Australia Bank and Westpac have shown over the past few weeks. So ANZ's right there at the top of the list of quality and momentum, not just in Australia but also in Asia.
Yeah, very quickly, you say it's the standout, but there are a lot of headwinds for these Australian banks, aren't there?
There's a lot of challenges, but their returns on equity are very high, their profit levels are very high, and they're not only being maintained, they're being grown. As long as that continues, there will be momentum behind these banks.
Peter, thank you so much for joining us. Peter Esho there, joining us from Sydney's